2023 seems promising for Tesla and by extension its stock. This is something Tesla investors are always looking forward to, as the automaker's prospects keep getting better by the day. According to numerous potential boosters for Tesla stock's price this year, there are two other catalysts that can cause Tesla's stock's price to double this year. Hey guys, welcome back to Tesla Tomorrow. Tesla currently holds the EV industry with no other company coming close. Big names in the automobile industry have also confirmed that EVs are here to stay and are gradually picking up shares of ICE vehicles. According to ARK Invest CFA Tachakini, traditional automakers like Ford should be worried since most others have got their gas-powered cars. And while they don't have great autonomous solutions, this is something that they should be concerned about. Investors need to know that Tesla is not just a car company, and this is what has kept it in the leading position for years. With many incredible catalysts on the way, it is only a matter of time before Tesla completely removes the competition. What are Tesla's latest catalysts for 2023? Let's find out, but before we get into it, if you like this type of content, don't forget to like and subscribe, and turn on notifications to keep up to date on everything going on with Tesla. The first catalyst here will be Tesla announcing a new car model as soon as the 1st of March. Tesla disclosed in a recent press release that it plans to host its 2023 Investor Day on the 1st of March this year. According to the automaker, this will be the first event that's going to get live streamed from its Gigafactory in Texas, with the option for some of its institutional and retail investors to attend in person. Tesla stated in its note that investors will be able to see its most advanced production line, as well as discuss long-term expansion plans, Generation 3 platform, capital allocation, and other subjects with our leadership team. Tesla cited its Generation 3 platform, which Musk has previously mentioned would be Tesla's next vehicle platform, which will enable cheaper electric vehicles. Tesla also stated that it would discuss long-term expansion plans, which could mean that Elon Musk will finally release his Master Plan Part 3, something that he has been talking about for the past few years. Tesla's Generation 3 platform could be the $25,000 Tesla that investors have been waiting for. One other catalyst which Tesla investors may be ignoring is Tesla Insurance. Tesla launched its car insurance service in August 2019, pledging to give drivers up to 20% cheaper rates than its competition. The car company claimed that because it knew its vehicles best, it could leverage the advanced technology, safety, and serviceability of Tesla cars to provide insurance at a lower cost. At first, Tesla car insurance was only available in California, but since then, the program has expanded to many other states. Analysts at Morgan Stanley predicted alongside the launch of Tesla Insurance that it could pose a long-term threat to the US auto insurance industry due to its pricing sophistication and distribution strategy, and these forecasts could now be supported by the strong growth that Tesla's offering has seen so far. Elon Musk has also said that the product is already beginning to impact the pricing of competitors. Musk has said that his company's insurance offering has already made a significant impression on the market, with other large car insurers having been forced to offer better rates for Tesla vehicles. At Tesla Q4 earnings call, Musk spoke about the high repair costs for Tesla cars, stating that the company is seeking to minimize this via its foray into the insurance space. Musk stated that with Tesla's operating insurance at a competitive rate, that makes the other car insurance companies offer better rates for Teslas, and so it has a bigger effect than most investors think because it improves total cost or insurance costs even when they don't use Tesla insurance. This is because now other companies have to compete with Tesla and cannot charge outrageous insurance for Tesla cars. Currently, Tesla is not providing specific financial details of its nascent insurance business, which launched last year and uses real-time driving behavior data to determine policy terms for Tesla drivers. However, the company's CFO Zach Kirkhorn confirmed during the company's earnings call that the insurance business was at a $300 million annual premium run rate as of the end of last year and is growing at a rate of 20% per quarter. Kirkhorn noted that the broader motivation for Tesla in introducing an insurance offering had always been to improve the total cost of ownership for its cars, given the high premiums it had observed from some third-party insurers. According to him, that remains Tesla's priority. AMD, the company, will obviously run this as a healthy business, although it plans to ensure that this costs low and insurance stays affordable to its customers. The automaker plans to sell insurance in 45 states by the end of 2023. Tesla Insurance has lowered the price for Tesla users, and it's even more incredible for users since Tesla vehicles, unlike regular vehicles, are like smartphones with highly impressive technology. One other benefit of the offering from a Tesla user and operational perspective is the feedback loop it provides into minimizing the cost of repair for Tesla vehicles worldwide. Musk said that Tesla wants to minimize the cost of repairing its vehicles if it's in a collision. According to him, the company previously didn't have good insight into this because the other insurance companies would cover the cost. and this cost, in some cases, were unreasonably high. In response to this, Tesla has adjusted the design of its car and made changes in the software to minimize the cost of repair. Another impressive catalyst for Tesla is its demand. Unlike most investors feared, Tesla's demand is still very much on the high side. Musk said during Tesla's 2022 earnings call that the most common question that the company has been getting from investors is about demand, a topic which he wanted to put to rest. The Tesla CEO disclosed that in January alone, Tesla had seen the strongest orders year to date than ever in its history. He added that the company is seeing orders at almost twice the rate of production. Although Musk has said that it's hard to say whether car orders will continue at twice the rate of production, the orders are actually higher than expected. The Tesla CEO cited that prices really matter, and he thinks that just a vast number of people will want to buy a Tesla car, but they just can't afford it. And so these prices change, and they really make a difference for the average consumer by making Tesla cars affordable for people who want to buy a Tesla but find it too expensive. He further reiterated the importance of affordability even for people who are well-to-do and who have a lot of money. Judging by Musk's statement, it is expected that Tesla's demand will continue to stay strong despite contraction in the automobile market. One other topic which Musk addressed was the issue of price control. Musk claimed that Tesla is making very good progress on cost control and is seeing the cost of production in Berlin and Austin drop with the growth in production. According to him, with respect to autopilot, the automaker has deployed its FSD beta for city streets to roughly 400,000 consumers in North America, and is currently at about 100 million miles of FSD outside of highways. Elon Musk said that Tesla's published data shows an improvement in safety statistics, adding that Tesla would not have released the FSD beta if those safety statistics were not excellent. Elon Musk believes that this is a big milestone for autonomy, as FSD beta is the only way any consumer can actually test the latest AI-powered autonomy. Tesla's energy business is also another goldmine for the company. Regarding this, Musk said that the production rate of 4680 battery cells reached 1,000 cars a week at the end of last year, and Tesla is increasing capacity for its cells by another 100 gigawatt hours. Still, at Tesla's recent earnings call, Musk said that the company's long-term goal is to get in excess of 1,000 gigawatt hours of cells produced internally and continue to use the self-cell providers. According to Elon Musk, Tesla will continue to use other cell providers as the demand for lithium-ion batteries is quasi-infinite and will be for quite some time, and so he feels that Tesla can scale a lot faster using both suppliers and internally produced cells. He said, "We've got an amazing plan for making the 4680 cell a low-cost and high-energy density one. Energy storage will also see massive growth, and that is continuing to accelerate." He reiterated that the three pillars for sustainable energy in the future are electric vehicles, solar, and wind, and the third key item is stationary storage to store the energy from solar and wind. According to him, the sun doesn't shine all the time and the wind doesn't blow all the time, which begs the need to have another way to efficiently store this energy. Do you think Tesla can double its stock in 2023? Let us know down below. And if you want to know more about what Tesla's been up to in the last few days, go ahead and click on this next video on your screen. See you there.